Welcome. In the last few days, few weeks, we are seeing major reactions in the stock market and gold and dollar. We all know that gold goes higher whenever there is some uncertainty. The situation is similar. There have been tariff announcements by various governments and a lot of interchange of views and decisions which are distracting the whole macro situation in the world. That is creating demand for the gold, and gold is going higher and higher. Gold, which is supposed to give 9 to 10% return per annum, within few days and few weeks itself, it's moved almost 10% in no time. Will gold go up a little more higher? In the current situations, it is really alarming to see the way gold is almost reaching 90,000 rupees. Even in the dollar terms, it's almost touched 2,900 rupees. Similarly, we are seeing strength in gold, strength in dollar, weakness in the Indian stock market. Yes, some macro changes, some announcements have given hope that there are some changes taking place which can reverse the trends of these assets and give us some hope that stock market also can now revive and give some sort of great moves going forward. Come, let us see on the charts what are the levels as per the historical charts where the real moves on gold, where the real moves on dollar, where the real moves on Nifty have moved forward as per the previous historical data, which will give us a good insight that where dollar can stop, where dollar can give again an opportunity, where gold can give an opportunity. Similarly, where stock market can give an opportunity. If we see the historical charts, definitely we'll get some great idea that we are reaching some sort of levels where we can find some hope that our opportunities again are going to arise in this particular levels. Come, let's see the charts and understand where we are heading. Now, if we see the gold mini futures, which is the MCX, as per the historical level, we have a great support at almost 74,500 and 80,000 rupees per tula. Now, this is MCX. Generally, if you see the spot markets about 2 to 3,000 rupees per tula higher. So if it is 8,000 is a support as per the historical chart, up to November, when we see it is about 80,000. That means the spot gold should be somewhere around 83,000, 83,500 rupees, where there's great support there. So that is a place where again when gold comes down, we will get an opportunity to buy. But is it time for us to think about buying gold now? Yes, if you have a requirement, there is no way you need to go and buy. But if we can hold, we can wait for gold to correct, because major announcements are completed in all the parts of the world, whether in India, whether in US, whether it is in China. Major announcements are clear, and some sort of tariff announcements, some sort of interchange of decisions. All these things are created some sort of a confusion. That's why we all know gold is a safety haven. That's why people have shifted their funds to gold. That's the reason why gold has gone up. This in addition to the demand, because of the marriage season, because of the regular requirements of the consumers, the price of gold has gone higher and higher, and almost in the last few weeks it went up almost 10%. But it is time for gold to top out. That is what is the charts, as per the historical charts, what I see, because the historical performance is almost reached in just a few weeks. So there might be some sort of profit booking there. In addition to that, there has been an interest 25 bps reduction by RBI, which will also create some sort of interest in the stock market also, because that will reduce the cost of funds for the Indian capital market, Indian companies. That will convert into some sort of profitability. In addition to that, the tax slabs, tax benefits that are provided in the budget will give some sort of disposable money for individuals to invest. So that money can come into mutual funds, that money can come into consumption. All that will again revive the stock market going forward. So where is that Nifty level? What we can see is a support in some sort of period where when the correction takes place. If we see the important levels, we have around 21,800 here at this particular support and 23,500 is resistance. So we will see some sort of 21,600 to 22,800 can be a decent range between which the stock market can hold. By then it will be almost 15 to 20% correction from all-time high. Now the point is, if you see the historical performance in the last 10 years, Nifty has corrected 17% during 2018. So we will see again 12% correction during 2019, and in 2020, because of COVID, which is a exceptional situation, the correction has been almost 40%, which can be ruled out because such situation is not existing in the current scenario. And there has been an 18% correction here in 2022 and 11% correction here in 2023. So the historical performance of Nifty shows that somewhere between 18 to 12-13% is the general correction in the last 10 years. And currently Nifty has corrected almost 13 to 14%. That means it is very near to the historical reactions where Nifty is going to reach when the correction is getting completed. In current situation also, if you see the interest rate reduction and the tax benefits that are provided in budget and a lot of money that has been released by RBI, almost 1 trillion rupees to the banking sector, will create some sort of availability of funds. And at the same time, the valuation of index is also almost at PE 20, which itself is a good support for Nifty itself. So there might be some more correction in individual stocks and individual sectors, but this sort of bottoming out process can start going forward in the next couple of months, which will give great opportunity to investors to invest in all those stocks which they wanted to. Now coming to the dollar, if you see the historical chart of dollar around 84.50, there is a good support in dollar, and again at 84 also, if you see the 84.10 and 84.50 level, there was a resistance, and that resistance has crossed and gone higher and higher, and now the dollar is slowly cooling down. So going forward, when the dollar cools down further, we will see some sort of rise in demand for dollar when it falls to a certain level of almost 84.5, and the dollar is now trying to reverse the candlestick formations, and the major moves that have taken place in the last few weeks shows that there has been a huge reaction, and that reaction needs to be cooled down with the interest rate reduction and the budget announcements, and also the clarity on tariffs worldwide is going to give some sort of reversal in the fund movement from dollar, from gold, from silver to stock markets. Yes, currently even if you see the US stock market is really doing alarmingly great because of the new government formation and a lot of major announcements, policy decisions, all those things to protect US economy and US corporate companies. So that is creating some sort of interest among investors to move towards US equity markets. So gold, dollar, US equity market, these three are in a current strong trend, but gold and dollar can see some sort of top out in the short term as per the huge reaction that has happened in the last 6 months or 3 months, after which some profit booking cannot be ruled out, and that will create some sort of interest or fund movement into the stock market and give some sort of strength to the Indian stock market going forward. However, we need to go through the levels and the fundamental performance of individual stocks and sectors and take an informed decision. I am not a SEBI analyst. I have just done some study on the charts and found some sort of major supports and levels where one can really work out, do research, consider those levels, and if interested, maybe do some due diligence of those opportunities and make some good investments and make some great opportunities and make some good profits. Thank you.